Thank you for watching me on the Endless Mountain Network. This is Derek, and today is Thursday, February the 5th, 2009. The chart you see on the intro is the intraday chart as of a little after noontime. What a V-shaped pattern we are seeing right now, and we'll see how close my instincts are to being right, because I have been using instincts very powerfully, trying to strengthen my instincts, trying to trust my instincts as much as I can. And overall, I've been doing a very good job. No, I don't trust them 100% of the time, and no, they're not right 100% of the time, but I'm working as hard as I can so that I trust them more and they are right more, and it actually is working pretty well. My instinct was saying yesterday that the Dow Jones would top at about 8150. It topped at 8160, which was very close. I even said 8150 to 8200 range, so I was correct about that. And then as it was selling off yesterday, I was thinking to myself, it's going to test 8150 area again to make a double top. So once again, we'll see if 8150 to 8175 area does make a double top. Who knows? But when the market sold off today at the start of the day, I was kind of wondering how this was going to come into play. I was thinking, well, maybe it will test this area in a few days. Then, of course, the rally came. The rally wasn't a surprise, so now I tested some resistance level. The downtrend line, it didn't make it. Then the next one was 7,950. It flew through that. I didn't think there was any way it was going to break the uptrend line. It did. And then, of course, we had 8,000. It did find resistance at 8,000, but the third or so time that it hit, was playing with it, it's just broke through it, and now it's even at 80.50. 100 points away from that 81.50 area that I'm talking about. So whatever happens on there, we'll just have to wait and see, but that's what I'm just trying to figure out what my instinct tells me. Other things that my instinct is telling me is that 81.50, like I say, will be a top, and then the next time we go lower, breaking that 78.50 area will most likely happen, and that we will test 7,500 area, 7,400 low from November, sometime later this month, probably near the end of the month. That's where my instinct is going right now. Whether this will happen or not, well, we'll find out over the next few weeks. I'm either going to be right or I'm going to be wrong. We'll see how that happens. And when I say it tests the 7,500 area, that means I think when it tests it, I don't know if it's going to break it or not. I think if it breaks 73.95, it's not going to break it by much. And I don't think we'll see those levels for a while. I think we will have a phony recovery, if you want to call it. Just like Peter Schiff calls the rally of the US dollar phony, we will have what they call probably like a phony rally in the stock market. However, of course, as one trying to predict which direction the stock market is going to be going, you want to figure out based on how the banks and the governments are trying to manipulate things. If you know the banks and government are going to try and manipulate buy orders, you want to get out of your shorts, and you want to go with your long positions. If you are shorting the stock market, and I would take a look at that 81.50, 83.50 area. If it goes a little bit higher than that, you may want to take your shorts for a loss. And if it does manage to go below the 78.50, 7,500 area, you may want to profit take for a gain. Also, I mentioned the stock WIN. If you did short that stock and you want some information on it, let me know, because the stock is pretty much hasn't done much at all. I didn't short it myself, as I don't trade American stocks that much. And if no one really did the short, there's really no sense in me really even looking at it too much. So let me know if you are in the WIN stock for a short. Okay, so other things to mention, the bailout. There's a bailout going on with Obama. And once again, this is just he's doing the same thing President Bush did. No big changes here. But another reason for the possible short-term rally, however, is that we do have Obama. Like, everyone thinks he's this big savior, this whole like Jesus Christ type savior, if you will. And it's going to take some time for the reality to set in for the majority of the people that are brainwashed by the the media and what CNBC, CNN, Fox News, what all of these networks are trying to say. So because of that, there's going to be so many people that are thinking the market's safe. They're going to keep on saying, oh, we've hit a bottom, especially if we can find an area to hold 8,500 to 9,000 Dow as support. They're definitely going to say there's a bottom. There'd obviously be a nice inverted head and shoulders pattern to get to 10,000. All of these people are going to say buy, and it's probably going to go up if that happens. So I do like to keep that into play. Like I said, as far as like I said earlier about it going down for another few weeks, I do have the feeling that the instinct is telling me that we would have like a double bottom on November. It would almost be like another double bottom based on the November lows. And if that's the case, that's what my instinct's telling me, and it's either going to be right or it's going to be wrong. But I do believe in 2 months up, 2 months down right now is the way the markets are going. So January 6th was the top. Taking 2 months to that brings us to the end of February, start of March. We are still at the start of February. It's only been a month now since the top. So that to me means whatever rallies we have here are most likely going to fail. We'll probably be breaking that 78.50 area, and we will most likely make some new lows, and I think this will be the last leg lower. However, that doesn't mean that I'm going to be right. As I see a minute by minute, hour by hour, day by day changes of the stock market, my instincts do change here and there based on the new changes. So I have to keep that into account, and because of that, I'll keep posting whichever updates I think are needed for the time right now. But Obama's making these bailout plans. The last time we had the bailout in November, the market sank, and then when the bailout money comes in, it takes a few weeks for everything to come into play for the market prices to react. It'll probably go up because of the bailout money, and of course this is going to make that hockey stick that Glenn Beck was talking about, the inconvenient debt if you will, be a longer blade on the hockey stick, which means higher hyperinflation. And I think we've just totally started this whole bailout, devaluing the currency. It's just started, I think, and that's pretty sad to say, I guess. But I mean, you can't just expect what you want to happen. You got to expect what you think is going to happen. Right now, my predictions say that there's going to be a lot more of this bailing out. Unfortunately, it's going to cause a lot of major problems in this world, but there really isn't any way around the major problems. It's going to happen regardless. Either we let this thing collapse now, we get the pain now, and the pain won't be as bad in a few years, or they don't let it collapse, be less pain for less people right now, but there'd be more pain in the 2011-2012 time frame. As a guess, as an instinctive guess, there's more of my instincts acting right there. Whether that's right or not, who knows, but right now I'm trusting them to be correct, and we'll see how everything plays out right now. Thank you for watching. Peace and light, and have yourself a magnificent day, everyone. Bye-bye.